Now it's my turn to take you to business tax provision. Let's start with section 199. What is section 199A? So section 199A is for deduction for your qualified business income. And for this deduction, you don't need any degree or any qualification. You have any income from a partnership firm or sole proprietorship or S corporation will get this deduction 20%. What's changed after OBBBA? So earlier this provision was set to expire. It was set to expire for 2025. But now they made it permanent. Means there is no uncertainty. You can plan your long-term taxes.
So the question that we are asked here earlier, QBI was expiring at the end of 25. So a lot of people were considering a flow-through entity, S Corp, LLC has 37% tax rate. C Corp has 21% tax rate. So should we convert our S Corp to LLC, especially when QBI, the 20% deduction is going away? Now, since they have made it permanent, meaning this QBI deduction is not going away, we know that forever. Those discussions converting S Corp, LLC to C Corp, those discussions have gone away, subsided. So if you have a flow-through entity or a C Corp, you just want to look at it before the end of the year.
Now let's move on to another provision, that is section 179 deduction. And this provision is for depreciation. So under section 179, the earlier limit was 1.2 million. Now the limit has increased from 1.2 million. It's now increased to 2.5 million. It's double. So under this provision, you can claim depreciation up to 2.5 million. But that only the limit is up to your profit. So under this provision, you can claim depreciation only in profitable years. You cannot claim losses under this section. Let me give you one example. If I'm running a business, I'm having a taxable profit of 1 million. And I've already invested 2.5 million in my business asset. So I can claim up to 1 million in section 179. But balance 1.5 million, I can claim under bonus depreciation.
So even if you have 2.5 million of investment, you technically qualify for 2.5 million. But since your profit is only 1 million, you cannot claim more than 1 million. Meaning the limit, even though it's 2.5, but it's limited. It cannot create loss in your business. It's limited to the profit that you're showing in that year. So this does not make sense for a lot of people who are not showing the profit, who show, okay, how much profit? How much did I show last year? 30,000. How about 35? So in that case, even though the rule says 2.5 million, but you are limited to 35,000. That's the profit you showed.
How you can use this bonus depreciation? So as name said, bonus is obviously some over and above the regular. So bonus depreciation is a tax incentive that will allow the business owner to depreciate their asset at a higher rate. So earlier bonus depreciation was at declining rate. For 2025, it was at 40% declining rate. And now the bonus depreciation is back, and now we can claim 100% in the year in which we place those assets into service. So under bonus depreciation, one more twist is there is no cap limit. There is no condition of profit. You can create loss under this section. Let's see the comparison. So under both the cases, bonus depreciation and section 179, immediate expensing is allowed. In bonus depreciation, there is no dollar limit, whereas under section 179, up to 2.5 million you can claim. Whereas in bonus depreciation, there is no phase out threshold. Under section 179, if your asset value is more than 4 million, it started phasing out, and it will completely phase out if it more than 6.5 million.
Even bonus depreciation is going to be the new thing. It's going to be the new game. No limit. You can create losses that you can offset against other companies' income. So you have a business where you're making money, then you have a real estate company, then you have another investment company. You can create losses in those entities under bonus depreciation, create a loss offset against this income. So a lot of planning opportunities when it comes to business side. This is a business tax bill.
Next is research and development expense. So government wants to encourage domestic research. So that's why they introduce immediate reward. So earlier we have to amortize our research and development expense for 5 years. So now you can immediately expense out. Whatever money you spent on research and development, you can immediately expense it out. You don't need to capitalize it. There is one more provision for research and development. The earlier provision we saw will reduce your income, but this provision will reduce your tax liability. So under this provision, if you are getting credit for your research and development and you are having gross receipts of less than 5 million, you don't need to pay payroll tax. You can offset your payroll tax liability against your research and development credit. Means government is saying you no profit, you don't need to pay any taxes. Even payroll tax also.
It's a huge thing. It's a big deal.
Yeah.
You can save up to $500,000. Everybody has payroll. Yeah. Instead of waiting for the year end, just offset the credit against the payroll taxes.
Yeah. So earlier the limit was 250K. Now the limit has increased to 500. Interest deduction. So earlier the interest deduction was 30% on EBIT, that is earning before interest and tax. The two major component was missing over here, that is depreciation and amortization. But now they introduce like you can also add those depreciation amortization in your earnings. Means your earnings will be higher and you will get more deduction. That is 30% on EBITDA. That is earning before
So what
interest.
used to happen, especially let's say if you have large loan, $1 million loan against your business, and you are not showing that much profit. Profit is shown as lesser. Then the interest was deducted only to the extent of interest before interest and tax, EBIT they call it.
Yes.
Now you can add depreciation and amortization on that number, whatever depreciation you're claiming on the tax return, and the interest can be claimed to that point.
Yes.
So right now the interest rates are very high. On $1 million, you're paying probably $80,000, $70,000 in interest. If you're showing a profit of only $30,000, it doesn't work. So a lot of people will be allowed to claim more interest deduction on their business tax return if you have the business side.
Now next is charitable deduction. So earlier the limit was 10% on your taxable income. But from 2026 onwards, there are two limits that we have to see. One, there is a 1% floor and maximum will be 10% will be taxable. Yeah, this is just an example. The taxable income is 500,000 and charitable contribution they made 600,000. 1% they will not get any benefit and maximum is 500,000 they will get, but total contribution they made is 600,000. So out of that 50,000 will not be deductible and 550 out of that only 500,000 they can claim. Now next is opportunity zone. This will give you opportunity to defer your capital gain tax. So if you invest your capital gain in opportunity zone, this zone is created by the every state government. They created this provision to develop lower level income areas. So that's why they want more investment. So they extended this provision to 2035. So you have till 2035
So it
time
has
limit
to be done for 10 years. Whenever it's changed,
Yes.
it's always done for 10 years. Otherwise, it will defeat the purpose. The idea is if you invest now into opportunity zone and leave it there for 10 years, you don't have to pay the capital gain
capital
tax.
index. Yeah.
But just remember, ask yourself, why would the government go out of their way to say invest here?
So under 1099 reporting threshold, under this provision will reduce your compliance burden. So earlier the limit was 600 and now it increased to 2000. So this clean energy credit that was also set to expire in 2032, but now it's expiring soon. If you are thinking to buy electronic vehicle, you have time till 30th of September. After that, you will not get any credit.